Hello nieces, hello nephews, it's your Uncle Charles here. Now was I right or was I right? Uncle Charles did mention if we can clear that 380 level, SPY will most likely go for the gap fill around the 390-ish zone. Okay, now I don't want to give the wrong impression here. That was not a prediction. I don't want anybody saying, Uncle Charles, you got it right. Your prediction was right. It's not a prediction. It was purely unbiased technical analysis, which is what I try to do here in every single one of my videos. And if that sounds good to you guys, please hit the like button, hit the subscribe button, and turn on the notification bell. It would mean a lot. Now, we're going to start this off with the flow sentiment as usual. Have a filter for 500K premiums or above, as you can see here. For the SPY, and 76% in the puts, 24% in the calls, still overall bearish. Okay, if I could over here you can add some filters, all right? So I can add the expiration date 1 month out, and it'll show me all the expirations date, contracts with expiration date within 1 month. And here it is, still overall bearish. If I go up to $1 million in premium, you can see most of the $1 million or higher contracts are targeting that July 15th date. Okay, there is one for June 24th, but mostly puts here. Okay, for that July 15th date, I think CPI is around July 13th. So interesting, very close to each other, but that's the option flow. Okay, moving on to my Discord. Yesterday's plan was pretty much the same as the plan I gave you guys on Thursday's video. Okay, I will look for calls. If a resistance gets cleared, I will look for calls. All right, and I gave the resistance levels 382, 383, 385, 387, and 390. Those were my price target. If we can clear that 382 level, look for calls. That was the plan. Here's the 15-minute chart. This orange line here is my 382 level, and as you can see, it worked out very well with SPY clearing 382. Hit my 383, 385 price target up here. That's the yellow line. Went up to the next zone, resistance zone, around 385 to 385.5. Based around 387, that was a challenge. Had a rising wedge in the intraday. I was also watching here for the high of the day, which was around 377.5. That was around noon or afternoon. But in closer to power hour, it started putting up a higher high, broke out of the rising wedge, and hit that 390 price target. Clutch at the very end of the day, kind of like a buzzer beater type move. It was beautiful. Okay, but the plan worked out very, very well. All right, so what's next? Okay, we got the gap fill. All right, SPY finally cleared that 38.2 retracement level from my Fibonacci level, which is around 380. Okay, that's from March 2020 low to the January 2022 high. Like I always say, false breakdowns are very bullish. Okay, we had a false breakdown of this multi-year trend line, the orange trend line that connects September 2020 low to October 2020 low to June 16th low. Recaptured it the next day when we had a false breakdown. It was an intraday false breakdown. Doesn't show on the daily chart, but what does show is this false breakdown of this falling wedge pattern. Okay, been talking about this falling wedge pattern all week. Had a false breakdown of it, recaptured it. We cleared and recaptured the 38.2 retracement level, and we filled the gap around the 389.5 to 390 zone. All right, I like to give it a zone. Now, this 390 zone is pretty critical, not only because it was the gap fill, but if I use my fib levels, because I love my fib levels, from the January 2022 high down to the June 2022 low, I got the 23.6 retracement level around 390. All right, as I mentioned in previous video, in many bear markets, the bottom is usually found when the 23.6 retracement level is recaptured. That's usually the beginning. Obviously, right, it's not guaranteed that the bottom is in just because we recaptured the 23.6 retracement level, but we can use it as a reference point just in case the 23.6 retracement level fails. That's our cue to enter puts. That's a sign that, hey, I don't think the bottom is in yet. Okay, but before we even get to that point, SPY still needs to clear that level, 390. So that is the next critical resistance level. If SPY can clear 390, that would be a big win for bulls, obviously, because that is a critical level. And it would put 397.45 in play. And then the next gap fill is around 401.50. All right, 57. Okay, that's the next gap fill. And above that is the 38.2 retracement level around 407.3-ish. All right, that level or around that zone did serve as a previous critical support level and a resistance level back in May and late May, early June. Okay, so those are the level to watch. If you're a bull, 390, 397.45, 401.57, then 407.34. Those are the upside targets. But it has to start with clearing a resistance, because remember, my strategy is to look for calls or look for bullish position when we can clear a resistance. All right, 390 is that big critical level. The best time to look for puts or to get bearish is when a support fails. All right, so SPY is around 389, 390 right now. All right, where it closes around 390. That means the next critical support that I have right now is 387. Remember on Thursday's video, 385 and 387 were resistant levels to watch if 380 cleared. Now that it's above those levels, those are now our support levels. All right, 387, 385, around 382, then the critical one at 380 based on the 38.2 retracement level. That's the best time to look for puts, is when you start seeing support levels fail. Now the big critical support level that I really want you guys to watch is the 380 level, because if 380 fails, this big old move to the upside was just a massive bull trap. And I think if 380 fails, well, that's a false breakout or a false recapture, and I think we're gonna head down much lower. Okay, now I don't care if SPY drops. I don't care if SPY goes to new all-time high. I don't care about that. All right, I'm just a technical analysis guy, and if SPY does drop, what I would like to see is it drop all the way down to the 50% retracement level around 349 to 350 zone. Not because I want to see the SPY die, but I just want to see a nice technical analysis move play out. Okay, will that happen? It's not guaranteed, and I don't know. All I can tell you guys is a lot of move that starts to the downside, a lot of big moves that give us these lower lows. A sign that we can watch that it's coming is when a support level fails. Okay, like I said, I cannot guarantee that the next down move is coming, but what we can watch out for is a support level and watch if it fails. If it does, that is our sign to enter puts or look or take bearish positions. 387, 385, 382, and the critical level at 380. And if those support levels fail, look for puts, play it level to level down to the next level. So if you enter puts off of 387 fail, look to take profits around 385. If you enter puts off of 385, look to take profit around 382. And when you get to the next level, you can always leave a small runner. That is Uncle Charles' strategy. That's what I do every single day. It's a no greed philosophy with this trading style. Okay, guys. Now what am I missing? Okay, gotta bring up the VIX here. And there you go with the VIX. VIX is looking bearish. Okay, had this white trend line right here. Had it for a while now, since early May. VIX broke out of it in early June, but yesterday broke back below, giving us a false breakout scenario, and it closed below that 50% retracement level around 27.59. For me to be bullish on VIX, it really needs to just break back out of this, this downtrend, the down white trend line. That means it needs to get above 27.84 minimum and go back and at least test or clear 29.74. That's a 38.2 retracement level. All right, but as long as below, especially 27.59, the next support level is around 25.44, and below that's a previous low around 23.77, then 22.4. All right, guys, so VIX is looking bearish right now. QQQ managed to clear a critical level, this white line right here. This white line right here, that's based on the 50% retracement level. Now, using the fib levels, right? Usually, in a correction, the fib level, based on the fib level, the correction will drop down to the 50 to the 61.8 retracement level range, all right? Which that range was 286.5 to 257.84, all right? Triple Q dropped as low as 270.5-ish, okay? So it dropped somewhere in between that range, and it recaptured the 50% retracement level, all right? Yesterday. That's a very big win for bulls, and there is a setup, all right, for more upside. But like I always say, we got to play it level to level. So I got the next resistant level around 297.2, then the gap fill around 299, and then above that I have 302.25. Those are the next resistant levels. Clearing these levels would give you a sign that we are going head up a little higher. Now the critical support level that I have for Triple Q is around 286.5. Then there's a gap around 286. Yep. So give it a zone 286 to 286.5. That's the next critical support for Triple Q. If that level fails, that is your cue. That is your sign to take bearish positions. Okay. With the next support below being around 282.46. Then I got a big drop down to 277.7. That's a previous low. Then below that 275, then 270.2. Okay, guys. Dow Jones also cleared a very critical level around 312.38 and filled the gap. So 312.38 is now the support level. As long as it holds 318.7, and then the gap fill around 323-ish is in play. Above that, I would be bullish because that breaks this red downtrend line right here, and that will put 324.8-ish in play, and possibly a previous high back around 332-ish, and up high around 341. Okay, best time to look for puts is when a support fails, starting with that 312.3-ish level. Then I got a gap down around 307, then 305.5, and 303.6. Okay, IWM also cleared resistant level around 174.35. Okay, got the gap around 177.6s. Let's see if it can fill that gap, but that 174.35 needs to hold. All right, and if it fills the gap and clears it, next resistance is around 180.7. Watch that support level. If it fails, then this was just a false breakout. Okay, just because it breaks out of a resistance is not always guaranteed that it's gonna keep going up. We still need to watch out for false breakouts. Okay, and if it does, that's our sign to turn back bearish. Apple, I had the 140, what is that, 141.6 level. That was a critical level I had. It cleared. Well, it's a weak breakout, okay, because it closed around 141.66. That's like 2 cents above, my breakout level. Not a strong breakout, but technically it is, which means 142.5 is with the gap fill. That's in play with 143.2-ish above that, and possibly we can break out this downtrend line and we can clear 143.7. That would be bullish. That's a downtrend line. That will put 146.6, then 152.4 in play. Okay, support now is around 138.4, which is around gap fill. If that fails, that's your cue to turn back bearish. Okay, 137 next support, and then 133.5-ish. Yeah, 133.5-ish. 132.6 is below that, and a very critical one around 128.7. Okay, that's based on these blue trend lines right here, looking like a weird looking triangle now. And last but not least, Tesla. Okay, now I got my fib levels from the June of 2019 low up to November 2021 high. Have the 50% retracement level around 639.95, and we had like about a lot of Teslas around that level back in late May and mid-June. Ultimately it held, So the 50% retracement level did hold. We did get some washes below it, but it held, recaptured. And I was watching this yellow trend line right here that connect June 2nd, June 9th, and June 21st high. Got the breakout, guys. That's a pretty strong breakout. Okay, so for this breakout to hold, 713.5 must hold. If Tesla drops below that, that's a false breakout, and that's your cue to look for bearish position. But as long as it hold, the next critical support that I got is around 744.3-ish. If I go from, add my fib level from the that's April 2022 high, as low as May 2022 low. That's where these fib levels, the orange one. Okay, I got the next level, 744.47. That clears above that, 765.76, and above that would be 780, 83, 82-ish. Okay, so those are my levels for Tesla right now. With this breakout, that's short-term bullish. Okay, don't turn bearish unless we can break back below that yellow trend line. All right, which is around 7, like I said, 712, 713 level. Okay, just watch that line. And that's what I have for you guys today. Thank you guys so much for watching. Really hope you guys made some good money this week, or made some type of progress. All right, if you respected your stop loss, good stuff. That's great risk management and very crucial to being a profitable trader. Okay, guys, so thank you guys. Have a great weekend. Peace.